Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, my name is ALICIA and I will be the moderator of this presentation video. Our group will present the topic function of the capital market and the principle of disclosure. This presentation discusses the role of the capital market and the importance of transparency in protecting investors. Let us begin with our first speakers.
On this second slide, it discusses the definition of the capital market. The capital market is a place where parties with excess funds, namely investors, meet with parties in need of funds, namely companies or issuers. This meeting occurs through the trading of long-term financial instruments. With the existence of the capital market, funding and investment needs can be met legally and structurally. So, the capital market functions as a bridge between investors and those who need capital. For example, a mining company that wants to expand operations and needs a large amount of funds. The company sells shares on the Indonesia Stock Exchange or IDX. The public or investors can buy these shares, and investors hope to receive dividends or an increase in share price, while the company obtains funds for expansion. Continue on the third slide, which is capital market instruments. Instruments traded in the capital market include stocks, bonds, mutual funds, and various other types of securities. Each instrument has different characteristics, risks, and benefits, allowing investors to choose according to their investment goals. These instruments are investments that can be chosen by investors according to their goals and risk levels. The main instruments mentioned are stocks, bonds, mutual funds, and other securities. Each instrument has different risks and different levels of return. The first example, stocks. Investors buy shares of PTXYZ. If the company profits, investors receive dividends and can obtain capital gains. Then, the second is bonds. Investors buy government bonds. Investors receive fixed interest each period and the principal is returned at maturity. Then, the third is mutual funds. Investors who do not want to manage their funds themselves invest through mutual funds. The funds are managed by an investment manager.
Objective of the principle of disclosure. Disclosure is important in the capital market. Its main goal is to protect investors. By sharing clear and honest information, company can reduce information asymmetry. This helps create a fair, orderly, and efficient market, and it also builds public trust in the capital market. Information that must be disclosed. Company must disclose both financial and non-financial information. Financial information include financial statement, profit or loss, and cash flow report. Non-financial information include management change, corporate action such as dividends, mergers or acquisition, and important business risks.
Example of the application of the principle of disclosure. Here are some examples of how companies should apply this disclosure rule. 1. Publishing regular financial reports. Companies must share their financial results regularly, for example, every quarter or year, so investors know the latest update about the company's finance. 2. Announcing corporate action via the stock exchange. Big decisions like paying a dividend or merging with another company must be announced through the stock exchange so everyone can see the update. 3. Disclosing important event or information. Companies should also share any major event that could affect investor decision, such as big change in operation or financial performance.
In this slide, we discuss the impact if the principle of disclosure is not applied in the capital market. The principle of disclosure is very important because investors need honest, complete, and timely information to make decisions. If this principle is ignored, various negative impacts will arise. First, investors may suffer losses when companies do not provide correct information. Investors may make wrong decisions such as buying shares of a company that is actually facing problems. As a result, they might lose money because their stock price can drop sharply once the real information is reflected. Second, market confidence will decline. If many companies are not transparent, investors will feel uncertain and afraid to invest. This causes investor interest to decrease and market activity to slow down because there is not sense of security and trust. 3. Companies might face sanction from the OJK. The Financial Service Authority has strict regulation regarding information disclosure. If a company violates this principle, it might receive fines, warning or legal sanctions, which can harm its reputation and business company. 4. The market companies inefficient. Without clear and equal access to information, stock price do not reflect the company true conditions. As a result, the market does not function properly and cannot allow credit funds to companies that truly perform well.
Okay, in conclusion, the capital market plays a vital role in supporting economic growth by connecting investors with companies and the government that require long-term funding through its economic, financial, allocation, and information function. The capital market promotes efficient research distribution and provides investment opportunities for the public. Therefore, the implementation of the disclosure principle is essential to ensure transparency, protect investors, prevent information asymmetry, and maintain public confidence. Without proper transparency and disclosure, the capital market cannot function effectively or sustainably. That concludes our presentation. Thank you for your time and attention, guys. Wassalamualaikum warahmatullahi wabarakatuh.